As we close out a super chaotic month for the financial markets, how is Portland real estate faring? Let's jump right into our very latest local real estate stats and trends. I'm RRMilligan, and I am happy to bring you the very latest in stats and trends for the Portland Metro real estate market. Once again, our sample is looking at the full Portland Metro area, including Southwest Washington. As always, if you have any questions, please drop them in the comments section and I will get back to you right away. The average sale price hit a high this last week, coming in about 4% higher than the previous week and 4.3% higher than last year at this time. As you know, we can see some swings in our week-to-week numbers. So looking at the bigger sample, the month of April, preliminarily we are looking at a 1.8% increase in the average sale price comparing April of 2024 to April of 2025, which is pretty similar to the 1.9% gain that we saw in March. I'm really curious to see what happens throughout the month of May as we start to see the results of sales that were agreed to during April's volatility. The supply of homes for buyers to choose from is back on the rise after the small reprieve that we saw in the previous week. We saw an increase in the number of homes that hit the for sale market this last week and an increase in the total number of homes on the market compared to last year at this time. That is kind of normal for this time of year. The inventory is up about 33% compared to last year. But for context, the delta between last year and this year has typically been about 29% on the low end and 33% on the high end over the past few months. So not a big surprise, at least not yet. Buyer demand has remained stubbornly steady for about 8 weeks straight now. You can see that here again in this chart. Again, it's good to see that the numbers aren't dropping like a rock, but typically we see an overall rise in the number of purchase contracts agreed to by buyers and sellers as we head through April, May, and into June. So what's going on with mortgage rates? The yield on the 10-year Treasury, which is one of our best indicators of where mortgage rates are headed, well, it inched down for the most part this week with a little bit of a reversal on Thursday. On Thursday morning, I saw the 30-year fixed advertised for about 6.375%. That's with one discount point, and that's the best case scenario on the best rate I could find advertised. Rates might be a little bit higher on Friday morning. As always, I'll check rates after I post this video and drop an update in the comment section. The number of days that a home spends on the market before receiving an acceptable offer has been moving down as we work through our spring market. The average days on market moved from 54 to 51 this last week, and the median days on market moved down from 19 to 18, which means that half the homes that sold received their magic offer in 18 days or less, and the other half took 18 days or more. That median 18 days on market is probably a little more indicative of what you might experience if you prep your home properly, price it right, and list it. So what's coming down the line for us? Well, we're expecting a jobs report on Friday. That report comes after a higher than expected jobless claim report on Wednesday and some mixed inflation reports for March. The Fed is meeting next week. The market expectation is that there is virtually no chance for a cut this next week, but that the Fed may start easing rates as early as June. If there is anything big or unexpected in that Friday jobs report and its effect on mortgage rates, I will post an update in the comments. Well, there you have it, the long and short of it this past week. As always, if I missed anything or there's something that you'd like to ask or report, please drop a note in the comments section and I will follow up. For now, have a great weekend and I will see you right here next week.